You're tuned back into Agriculture Today, and we continue our conversation about the WASDE report with K-State grain economist Dan O'Brien and senior economist with the International Grain Program, Guy Allen. Dan, getting started with you in our recent segment, which if you missed, you can listen to on agtoday.net. We talked about corn, grain sorghum, and soybeans, and so starting the conversation now about wheat.
The report that just came out, that WASDE report, released July the 12th, this last Wednesday, did show an increase in U.S. ending stocks and U.S. production up about 74 million to 1.739 billion bushels, and ending stocks up to 592 from about 562. And the surprise in that report came from higher hard red winter wheat and soft red winter wheat numbers domestically in the U.S. than had been expected, and really the late rains that have come are being factored into those numbers. Really some lower numbers for U.S. durum wheat grown to the northern states. Hard red spring also lower. I think the bigger picture, step over into just a little bit internationally, at least on our continent, just extremely dry conditions, horribly dry conditions up in Canada, impacting how much wheat and other crops are anticipating coming out of there. So that's in play. The USDA did drop the domestic price projection about 20 cents down to 7.50, and just in terms of class by class changes, maybe the best thing to look at is anticipated changes in ending stocks. Hard red winter down about 5 million bushels. Hard red spring down about 3, so not a lot of change. But soft red winter numbers, ending stocks up about 45. So there you have it, Guy. It's the soft red winter in the Illinois, et cetera, that's in that Illinois, Indiana, it's kind of leading the day. White wheat also projected to be down about 9, et cetera. So much is riding on the major run up in soft red winter that it has affected the overall U.S. supply demand balance sheet.
Yeah, just being back in Illinois over the 4th of July, the wheat harvest was coming off, and they were coming off quite better than anticipated. Not a lot of wheat through that area, but what was coming off did look quite good. Yeah, just turning to the international situation, USDA put world wheat production at about 796.7 million metric tons. Now that was down 3.5 million metric tons from about 800 million metric tons last month, but it's still a record world wheat production that we're looking at. And even though it's looking pretty tough here in the Western Plains and up into Canada, the rest of the world's actually experiencing a fairly good wheat crop. Ukrainian forecast was at 17.5, unchanged. Exports at 10.5. Russian production was at 85 million metric tons, unchanged from June, but down 8% from last year. Exports are still projected at about 47 to 48 million metric tons. That was up 1 million metric tons from last month, and again the highest export number coming out of Russia. The EU, though, it was off about 1.5 million metric tons compared to last June at 138.5 million metric tons, but they did leave exports unchanged on that. And Canada, as you said, that dry weather up there is having an impact. It came down 2 million metric tons to about 35 million metric tons of export compared to 33.8 last year. Now, going down to my favorite place, Australia, those numbers were left unchanged, but they are down from last year. Production's coming in at 29 million metric tons compared to just under 40 last year. But exports are expected to be up 500,000 metric tons. So we will continue to see that. As you mentioned, El Nino situation, that tends to be dry weather for Australia, but they've continued to have very good rains, particularly in the eastern belt over there. Interesting enough, on the bigger producers, India's forecast is at 13.5 million metric tons, which is unchanged from June. But interestingly, it looks like India is going to shut off any exports coming out of there, particularly for any domestically produced wheat. I was reading today in the wires. China was left unchanged at 140 million metric tons, but as you and I have discussed, we've had some wet weather over there in China, which has downgraded some of the wheat. They're expected to import 12 million metric tons of milling grade type wheat. Some of the domestic stuff will be fed, and they expect that feed number to be up to about 36 million metric tons of poor quality wheat that needs to be fed. That's going to take world ending stocks down to 22.6 million metric tons. That's down 4.2 from last month, and below the 269 from last year. That's taking the global stocks to use ratio down to 33 1/3 compared to 34 last month, and it was about 34 for last year as well. So we continue to tighten that wheat situation up. And look, I think all wheat needs to do, for the most part, is stay priced out of the feed ration in those areas where it needs to, particularly in the U.S. I still think corn's going to be the leader, and that's why, even though the wheat numbers I'd suggest were fairly bullish, with those corn numbers coming down, wheat just needs to stay a bit of a premium to that.
And
Interesting that, and if I can add one thing in, that we talk about mega trends, and Guy, I know you have strong opinions on this. When you look at that world stocks use number 33.3%, that's the lowest since 2015-16, and the 20% world minus China ending stocks number is as tight as I have, going back at least 2013-14. So from being a longtime world wheat observer, and a former buyer seller on that and on the futures, how do you navigate a market with such potential volatility like that?
Well, very carefully. One, just stay hedged up, and I've never been accused of being a flat price cowboy. So just managing that risk is becoming increasingly important. Might turn to one area that's been quite volatile this week is this U.S. dollar value. We've seen a significant drop of that just in the last few days, and in the last week. It's dropped from about 102 down to below 100 into the 99 range. This is the lowest level we've seen in this dollar index for about 14 and a half months. So it's, which doesn't surprise me. It's in the wake of weaker than expected U.S. exports, and not only in agriculture, but in other products there as well. And then continued Federal Reserve rate hikes. The economic situation, although it's moving towards improvement, it's still not a real pretty outlook. And I think that's starting to devalue the dollar. I can't help but think, some of the efforts by China and Russia to remove the U.S. dollar as the world currency is starting to have some impact there as well. And I found it interesting that the UN came out today. People are suggesting that they're going to let Russia return to using the SWIFT system to do their banking in that. And I can't help but wonder if that's maybe being driven by this downward move in the U.S. dollar there as well. That said, though, a lot of our major buyers of wheat, or potential buyers of wheat, still haven't necessarily gained an appreciation in the value of their currency against the U.S. dollar. We need to keep in mind that big drivers of that index is the EU and Japan, and they're not necessarily big buyers of U.S. wheat.
And something else important to the grain market is the international freight market.
Yes, we always need to keep an eye on that. International freight rates have come down a bit since May. Not a lot. They've moved from about 1,500, I think, down to about 1,100 on the index. But that I'd suggest, is another leading indicator of just a lack of international import demand from our customers on that. And the thing I've always found, Dan and I talk a lot about production, and production is usually pretty well quantified. And the part of the market that will sneak up on you is that drop in demand. It's just a lot harder to quantify and see coming down the road.
And as we've talked about this WASDE report, were there any big surprises or anything that kind of shocked you for how it impacted the domestic market here in the U.S. or how it impacted the world market?
Guy, go ahead. I have a comment, but
All
go
I
ahead.
was gonna say was, look, just corn was the big surprise. You look, we're down to lows we haven't seen since 2021. Given the tightness of the global situation, I just don't think that these sort of price levels are justified, particularly in the continuing inflationary environment on that. And look, if I was a buyer, I'd sure be fronting up to the table to putting some price coverage on. But we haven't seen that demand come to the market, and that just makes me that just worries me a bit.
My surprise on that, Shelby, is that yes, we have short-term rains. So when I look at drought monitor maps, projected soil moisture in pretty important parts of the U.S. Corn Belt, still showing pretty dry. So I think we're sort of riding the wave of rains that come through, et cetera, and really. Until we get closer to the end, I think we're still going to have a lot of uncertainty as to where the markets are, where the production is for corn, for soybeans, and where we finally end up. It doesn't. But moisture sure helps without question. But is it a 15.3 billion bushel corn crop or a 4.3 billion bushel soybean crop, or is it something different? I think we're still up for a fair ride on this all the way through the August and really more importantly probably the September crop report, and we'll just have to see. Guy, any thoughts on that?
No, I really don't have anything to add. We're running pretty close to the edge, and it seems like the market has actually got close, particularly on corn and soybeans, at this tightness of not only U.S. but global stocks. And that's in the wake of record production as well as record demand, and it's just it doesn't take much to change things pretty quick.
Dan, Guy, I appreciate you both taking the time to join us today and talk about the international and domestic grain market.
Thank you, Shelby. Appreciate it.
Thank you.
That was that was senior economist with the International Grains Program, Guy Allen, and K-State grain economist, Dan O'Brien. A link to the World Agricultural Supply and Demand Estimates report can be found in today's show notes on agtoday.net. We're cutting to a short break now, but we'll be back with more ahead on Agriculture Today.